Right. Morning traders. Welcome back to Money Kapai. Happy Friday. Aiman here. All right. So looking at the S&P 500 dip on Thursday's session, likely reflecting the soft pressure in financial and broader uncertainty. But some good news is TSMC blew up third quarter results. So TSMC, I think, posted a jump in net profit and raised its 2025 revenue guidance on a strong demand, which also boosted confidence in AI sector. Right. So even though banks, especially those regional names, right, drag the sentiment, the tech chip, segment may partially cushion the downside if global flows remain favorable. So we believe that this is just a pullback. Well, technically, a broader trend, still remains bullish. So, towards the resistance, 6,700 remains intact, while the 6,500 support remains valid. Right. So, looking at the economic calendar and some of the significant economic data for next week, right? Okay, so I think investors can follow closely on the initial jobless claims on Thursday, together with these inflationary data like CPI, on next Friday next week. Right, so looking at the China A50, well, it posted a bullish move at close yesterday, part of the upside look, I think, tied with the Apple's renewed investment in China narrative recently, if you can remember. Also, at the same time, I think China is sticking with its production first economic approach to compete with the US economy, right, which also supports confidence in its sentiment. Also, if you look at the charts here, the index are well supported by the 14,700 level, rebounding higher if the bull to maintain, and we could see it reached the 15,500 resistance level. Right. So, yeah. As for the WTI crude oil futures, it retreated at close yesterday, I think driven by continued growing concern over potential global oil surplus and also renewed uh, US-China trade headwind, right? So I think forecasts from the EIA and also other point to an oversupply in 2026, right? So I think now, if the 57 level to be breached soon, we can see that 55 support level to be the next target. And for your information, we still keep a negative reading bias for WTI. Well, back home to Malaysia, the FKLI took a pause yesterday, holding steady after its recent bull run. So I think the market appears to be uh, digesting gains and also waiting for any fresh catalyst. So analysts, I think, also expect the volatility to be muted in the short term, with the index likely to consolidate within a range before the next directional push, right? Also, as we are entering the year end, right? So the market are likely to be to extend its bullish cycle, and again, we keep our positive trading bias unchanged at this juncture, with resistance still at 16,075 sorry, thousands 1675 points, while support is at 1570 points. Right. So yeah, well, looking at our watch list, right? So I think some of you might ask what the difference between the green and also the yellow color coding here. Well, right. So it is actually the yellow color is the one that we I mean that we follow closely with high potential in continuation of trend, while the green ones are the stock that we are waiting for the breakout above the key level. So yeah, for the yellow coding, we have MPI, CTOS, hanging on TMK, and also SOP as well as OCK. We're talking about OCK. If you remember, recently I showed you guys the OCK stock. Well, yes, true enough. Yesterday it has breached above the 48 cent level, and let's try to aim for the R1 and also the R2, which is at 51 cent level and also 54 cent level, as the overall trend is still remains in bullish, right? So looking at our Malaysia trading stocks, we have Oriental Kopi. So the stock is in its breakout formation above 1.50 ringgit. So with that, we expect the momentum to remain steady and the stock able to climb higher to test the next resistance at 1.60 ringgit, followed by 1.70 ringgit for the next resistance. Also, if the stock reverse and reverse below 1.40 ringgit, so this signals a further pullback. And next we have Inari Marathon, right? So the stock also experiencing a breakout formation after the recent pullback. So I mean, at this juncture, the stock has pulled breakout above 2.47, and we are expecting that the price to breach above 2.65 in the coming session, with to continue its high volume. Right, second resistance is at 2.80. So do watch out for 2.30 support for any attempt of reversal. Right. So lastly, we have FCPO. It ticked higher on yesterday's session. I think driven by India's palm oil import, which has slumped, and also the EU delayed its deforestation regulatory, reducing the near-term policy risk for Malaysian export. Also, I think towards the end of the year, the seasonal factor are also likely to attract the price higher. So in terms of technical wise, we believe that the bears are still holding. However, I mean, the bears are still holding the technical advantage for now, after potentially form a reversal pattern of double top, right? So we now still hold the negative trading bias, aiming for the 4,350 ringgit level, and our stop loss remains fixed at 4,600. So before I pass the floor to Wei Siang, I would like to wish Happy Deepavali to those who are celebrating, and wish you all a good blessing, right? So safe journey if you balik kampung, right? So with that, I end my presentation. Happy trading, and thank you.
Okay, thanks. Morning, everyone. Let me continue with a sector update on consumer sector. We are upgrading the sector to overweight from neutral. Our topics are 99, Speedmart, Nestle, Heineken, Mine News, and Focus Point. Essentially, we are foreseeing the sector outlook to improve in 2026. This is premised on the favorable fiscal policy, whereby we are seeing higher SARA handouts translating to stronger earnings growth for the sector, whilst the inclusive petrol subsidy rationalization approach has removed a major overhang to the sector. Apart from that, I think OPR cards, stronger ringgit, and robust tourist arrivals driven by the Visit Malaysia Year 2026 are also other positive catalysts. Essentially, the sector will continue to provide a defensive shelter by offering earnings visibility amidst the uncertain global macroeconomic outlook, thanks to the domestic centric earnings base and resilient consumption. We have also updated our target prices for both 99 Speedmart and Nestle. Essentially, for 99 Speedmart, we expect it to be one of the key or prime beneficiary of the higher SARA handouts, given its strong market share, entrenched network and brand equity. So the faster than expected rollout of its Sarah-enabled stores and higher allocation for this program has prompted us to raise our earnings by between 5 to 14%. We estimate more than 1,499 Speedmart stores are now enrolled for Sarah, with more to be ramped up going forward, given the higher allocation under budget 2026. So we correspondingly, we also raised our target price to 3 ringgit 56 cent, which is now implying a 41 times forward PE, as we tweak our risk assumptions to reflect the more exciting prospects underpinned by the favorable fiscal support policy. And as one of the largest distributors of Nestle products, I think 99 Speedmart should also see volume growth being driven by normalizing sentiment on Nestle brands. Speaking of Nestle, we have also upgraded our target price and maintained our buy call on Nestle. Our new target price is now 121 ringgit. Similarly to 99 Speedmart, we expect Nestle to benefit from the stronger fiscal support allocation in the form of SARA. And we believe Nestle top line recovery seen in second quarter will be sustainable, given its effective marketing engagement to stimulate consumer spending and normalizing sentiment on its brands. Of course, the latest ceasefire development in the Gaza war should also further strengthen this recovery. And on top of that, the easing key commodity prices should propel margin recovery going forward. We raised our earnings by between 3 to 5% after revising up our volume growth assumption to factor in the SARA impact. And we also raised our target price to 121 ringgit by pegging Nestle back to its 5-year mean at 41 times our forward PE. So maintain buy on Nestle as well. Our target price is now 121 ringgit. Let me stop here, and I think that's the last report for the day. Thank you so much for joining us this morning. Happy trading and happy weekend, happy long weekend ahead. We'll see you in the next morning kappa at 8. Thank you very much.